All right, yeah, I did mention there that President Bola Tinubu was still seeing the reforms growing at this point. And the latest one, we have the Nigeria Insurance Industry Reform Bill for 2025. It's now an act, and definitely we've seen the impacts, so far when you're looking at sectoral performance. Let's look at the NGX insurance counter there. Let's see how the index has grown so far. Yet to date, we've also seen some stocks there, some stocks listed there, that's insurance stocks, some of them up over 100%. All right, see the index there, NGX insurance performance, yet to date, that's up 50%, outperforming. That's the total all-share index at 1,051 points. Look at some stocks, insurance stocks listed there on the NGX. See the likes of NEM, according to investing.com, that's up 148% year to date. ICO, 71.60% year to date. Cornerstone, 57%. We see Mansard there, 28% up year to date. So we're seeing, good vibes when it comes to that financial services sector, especially for insurance. All right, let's bring in Omete Inko-Taria now. He's a chief consultant, Trinity Transnational Consulting, also the founder of Net Worth Investors Club. Joining me via Zoom. Great to have you on the show.
More glad for having me.
So, yes, we're seeing the reforms now. We're getting them back to back, at this point with, most industries targeted. And now we're seeing the insurance industry. Talk to me about how this elevated minimum capital requirement, we've seen 25 billion for non-life, 15 billion naira for life, 45 billion for reinsurers. How do you see that, affecting, smaller insurers' ability to raise funds and remain listed at this point? What are you seeing there?
Okay, first off, I want to point out the fact that it's long overdue, this sort of reform in the Nigerian insurance industry. If you recall, the banking recapitalization exercise started last year, and I talked about a situation where the Nigerian insurance industry has really underperformed, especially on the stock exchange, and needed serious reforms, beginning with a recapitalization. So what we are seeing today is going to be very beneficial for the insurance industry as a whole, because if you recall, exchange rate, when the Naira experienced a serious devaluation from about 750 Naira to 1,600 Naira to a dollar, that automatically meant that the capital base of the insurance sector as a whole became too cheap and too weak, and of course the insurance business is all about being there to make sure that they make claims and make payments for insurance premiums. And should most of these insurance products, especially dollar-denominated insurance products, be due for premium payments, then most insurance companies will go under, based on the fact that their share capital was just too weak, too small to deal with the kind of businesses that they were involved in and insuring, especially in the oil and gas sector. So this reform has come in at a very good time. All I was thinking was, should the exercise kick off after the banking recapitalization exercise is concluded in April 2026, then there is a great chance for it to succeed. For smaller insurers, what we will see is a case of mergers and acquisitions, especially for those who may not be able to meet up the capital base as may be required by the reform. But the truth is, in the end, the Nigerian insurance space will be fortified to be able to compete even globally.
Do you think, with the recapitalization drive in the insurance industry, lead to, mergers and acquisition activity, or are you seeing a consolidation at this point? And how might that consolidate share value, into, do you think that would make more or fewer stronger players, at this point, we'll see more M&As, play out in the insurance industry?
Actually, it will make insurance stocks even more expensive before the exercise begins, because as we speak now, having gotten the news, the market has already swung into action, and all insurance stocks in the NGX already are on full bid, making the maximum gains per day. You know, the Nigerian exchange does not permit any stock to gain more than 10% or lose more than 10% per day. So today's top gainers list, I expect to be dominated by the insurance companies, because you have some stocks that have bidded for up to 240 million shares, and there is no offer in the market right now. So that portends well for the share prices. And of course, those who are invested in insurance stocks, happy days are here.
Happy days for, I'm sure, investors that were able to get in early at this point. You know, following this news, how early do you think an investor should have, you know, situated in the insurance stocks, you know, before this news? Because we're already seeing most of them up over 140% year to date for the likes of NEM Insurance there.
Well, as you can see, the demand has increased suddenly, and most insurance stockholders do not want to sell at all. You see a situation where a stock has bids for as much as 50 million and no offers, and at the end of the day, 2 hours into trading, only about 1 million shares have been traded, which means this rally is just about starting. And I saw you began with the NGX Insurance Index making 50% year to date already. All I can say is let the entire investing public get set, because that's just very little compared to what's going to happen going forward. Most of these insurance stocks have actually been underpriced for so long, and a whole lot of repricing is going to take place even before we start hearing about deals of M&As and all that.
So that means an investor now that's maybe not, that doesn't have any skin right now in that sector still has a chance to getting, you know, at these prices.
Yes, absolutely. Actually, what happens is I always advise investors, do not run after a flying stock, because that will be akin to running after a moving train, and that's dangerous. So what happens is the demand will continue to build to an extent where those who actually put in trading funds on getting the news earlier than others will eventually want to start exiting such stocks. So in that case, what will happen is supplies will begin to come into the market, and then there will be a round of supplies where new entrants can now take position, as long as you are going in with patient fund this time. Whenever supplies becomes available, then you are sure to also benefit. But for now, it's better to stay safe and wait for a pullback, even though it doesn't look like it's going to happen anytime soon.
Yeah, I guess a tough choice there for an investor to make at this time. You don't want to buy the top. At the same time, you don't want to miss the train. Looking at the NGX listed insurers, the likes of ICO, Assented, and Cornerstone, which one appears more resilient and, you know, attractive, you know, post, you know, the reforms now, and which might struggle with the recapitalization timeline?
Okay, for those who are much more resilient, I would mention maybe the top 3, and that's talking about custodian insurance, which is even more expensive than some Tier 1 banks. That's a good one. And then you also have NEM Insurance, which follows it, and it reflects even in their prices. You know, the market has a way of rewarding you for good performances, especially when it comes to creating value for shareholders. So you have custodian insurance, NEM Insurance, Mansard Insurance. These are amongst the top 3, if not, if I'm not mistaken. And then some others who are still penny stocks right now, talking about Guinea Insurance, may struggle, but time shall tell, because some of them actually are doing well, just that they are not well capitalized enough and have not been able to really create sufficient value in terms of dividend payout to shareholders. And so most of them have remained penny stocks and even under ₦1 for so long. But thanks to the happy days that are here now, all of that will change.
All right, definitely we'll keep watching and tracking. At this point, it seems there's no stopping the stock markets, it just keeps going up. I've not seen a down day for a long time now. I don't know if you remember what it feels like to see red in the stock market in Nigeria.
Very, very rare, Ladi. We understand there is a saying in the stock market, and it's all over the world. I mean, not just in the NGX, but also in the foreign markets. There's a saying that goes this way: sell in May and go away. But for the first time in many years, May has brought in so many good tidings, and it's been a fantastic run for most Nigerian stocks. It began with a rally around January, February, which is normal. And then normally after dividend payment, we normally are supposed to have experienced a lull in the market. But here came May, and a lot of stocks were still jumping, especially the penny stocks. And after the penny stock jump came to an end, the blue chips on the NGX took up from there and have been running. And then, of course, we've got this insurance news, which has now made the insurance stocks the darlings of all stocks. Now, most traders are selling off some of their holdings in most of the blue chips to find a way to take position in the insurance stocks.
Right.
So
I guess at this point,
a wonderful ride for the NGX this season.
I guess at this point, to stay in May. Thank you so much, Omete Inkotari, as the Chief Consultant, Trinity Transnational Consulting, founder, Net Worth Investors Club. Thank you so much for coming on today.
Thank you very much, Ladi. Appreciate it.